Whether you want to call this a bubble or not, the tech sell-off is here, and it can go away just as easy as I'm removing this text. Micron down 26%, Intel 35%, SanDisk 39%, ARM 42%. And I'm not saying this is the end of the bull run for these stocks or even other stocks within their sector. But are you, or more importantly, your portfolio ready for it? Today we'll be looking at two companies, two different sectors, two different narratives, both prepared for takeoff, both prepared for the bubble, both here to diversify you out of this high concentration of AI trade, high concentration of tech focused on AI. So by the end of this video, you will know exactly the success story we are tracking for both of these companies, the risks they face in their execution, as well as the path that I'm tracking for each of them, the potential and the relevant levels of support that we expect them to hold to still be able to deliver on those expectations. Welcome to the trade setup. Manufacturing reshoring is a generational macro trend, and we are looking at one company preparing to fully capitalize on this opportunity. We are talking about Ametek. They operate in the electronic instruments and control industry. Amazing operating margin, 26.8% reported in the last quarter, about double compared to the industrial average. Now, why is this reshoring relevant to this company? Well, the factories from Asia moving to US and Europe. They don't just copy-paste, they're old assembly lines. Western labor costs are far too high for that. And what companies will seek to achieve is highly automated smart factories. Every single robot, conveyor, assembly line will require exactly the type of high-end precision sensors and controllers these guys make. To help their mission of being the leader in the manufacturing reshoring, they went ahead and acquired Indicor Instrumentation, which has gotten them into a bit of a debt. We can actually notice here, 2.5 billion, but they deliver mission-critical automation and testing tools. I'm talking sensors, motors, controllers, spectrometers, and I could go on. There is actually a quite large list, but the key word here is critical. It is mission critical. That is important as they work with the defense sector, the medical sector, and these are not products that you can just forego purchasing because you need to reduce spending because the government is under huge debt. No. This is not a hype stock built on promises like many companies on Wall Street are, especially these days. No, they have a $3.8 billion backlog, yeah, with a B. Then the switching costs are enormous, which just credits their pricing power. And Ametek has achieved breaking all-time company records for 4 consecutive quarters straight against their previous years. So they're running on a record year. Put that together and we clearly understand they're in a pretty good position. Now, this is not financial advice, and of course, this is not to say they would be immune to a major macroeconomic downshift, but they can survive inflation very, very easily by passing costs to the customers. So they certainly check a lot of boxes. Then the risk, of course there is risk, there always is and always will be, but it's primarily geopolitical. Their revenue, half of it is international, and the baseline tariffs are already priced in. But if this global trade war is to worsen, it could lead to some serious repricing across the sector, and that could have some serious effects on Ametek as well. But here's why the smart money isn't panicking. Ametek is not a fragile tech startup. They are elite, diversified heavyweight, and the stock is showing resilience, attempting its third breakout of its all-time highs. It has managed to get a brief break in the previous attempt, but nothing sustained. Then you may be wondering, why isn't this stock launching into orbit if the company is so well positioned? Wall Street, while they don't require the smartest people alive, they aren't stupid. They already know how good this company is. Absorbs its massive $5 billion Indicor acquisition. Now, with all of that said, we understand the fundamental perspective. But what does that mean? Are we looking to buy this? It's trading at all-time highs. It's already priced appropriately, you could say, for what it has already done. And I would normally agree. If we are to look at its large time trend, it is trading at all-time highs. It has risen continuously, taking some brief breaks here and there, some of them spanning a matter of weeks, some of them taking even a couple of years at a time, right? Well, that is all nice and true. But from a technical point of view, I am looking here at a structure that could set this stock up to see a massive breakout. And I'm talking, of course, about this potential series of 1-2 setups it has deployed that could allow a very, very strong move to happen, a move much stronger and much larger than whatever has happened throughout the past year. I'm looking at such a series of 1-2 setups that could allow a wave 3 to form immediately, where the ideal target is quite high and strong extensions could be expected. From a larger time frame perspective, this stock has built an ascending triangle with 4 touch points on the upper trend line, 3 touch points on the lower boundary, and right now it is its 4th attempt to get through these price levels. This is a bullish pattern, and the target for this as a larger wave 3 is the 138.2% extension of this as a wave 1. We are looking at $292, but if this structure is to really materialize, I believe we could see much further extensions. I believe this as a double 1-2 setup could allow an extended wave 3, potentially even internally, where we would get then a 4th and a 5th, easily potentially surpassing even that target. And then it would require yet another 4th and a 5th to complete this as a larger wave 3, completing this as a larger wave 3, and even then, the pattern would not be complete. So what are we really looking at? Well, my estimate would be about a 20, 30, 40% move in a pretty direct fashion from the current levels. We are looking for the breakout here. That would really be just a sensible confirmation at this point, since we are already on the cusp of this happening, and with the earnings potentially being a catalyst. Then what is the risk of this setup? Well, even though I find this to be a much less preferable outcome, if the current lows within this as a wave 2 do not manage to hold, I have to be very much aware of the risk that we could see either a reset within this as a 1-2, where the wave 2 would not have bottomed here. No, it would have been a larger A, B, C pattern that would currently be in formation. Or it could be the case that we are looking at a reset within this larger wave 2, which would imply a much larger correction to happen, which would imply we are looking at a correction that could go as low as the 78.6% retracement at $199, something to watch out for. But to be honest, if the current levels cannot hold, if the correction within this white wave 2 does not manage to hold at least the internal levels of support, the 78.6% retracement at $226, the pattern would have been incredibly damaged. The pattern that is strongly suggesting we would see a breakout, this ascending triangle, would have failed. The structure would very likely see a break below the beginning of this entire wave 1, which is where the formal invalidation resides. But trusting a setup without a confirmed breakout at that point would be impossible. Right now, I would have no problem at all with seeing an internal correction within this white wave 2 form an extension, especially if it sees a bounce from the trend line we are tracking. Maybe even if it forms a reset at the 78.6% retracement. Without this support zone, the setup would suffer greatly. Then the next item on the list we will talk about tonight, Duolingo. You may be wondering, why am I talking about a dying sector like EdTech? Coursera, Chegg are already trading at all-time lows, while Duolingo is really not far from it. While this one is not far from it, but Duolingo is not an education app. If you think it is, you are falling for one of the most brilliant illusions in the stock market history. This is not a tool you use to get a quick answer on something your knowledge lacks. This is not something that you do for work, that you just want to get done with. So how does this stay relevant? It's a game. It's a consumer engagement platform, much like gaming or social media. It integrates gamified mechanics and streak features to trigger dopamine loops. People use Duolingo because they want to feel productive. In mid-2025, Wall Street valued this green owl at a staggering $23 billion. Then the branch it was sitting on was cut, and the stock collapsed over 80%, leaving investors asking if generative AI is about to completely destroy this company. But behind this brutal sell-off lies a high-stakes corporate gamble. Management is intentionally slowing down their profits to build something much bigger, which is why today we're breaking down the hidden financials, the AI war, and the secret playbook Duolingo is using to target 100 million daily active users, 100 million daily active users by 2028. This bird of a company has been intentionally undercutting itself, trading short-term revenue for long-term growth. They moved premium features from their most expensive tier to cheaper ones. They decided to reinvest $50 million in user experience. All of that to reach this daily active user base of 100 million by 2028. So what's their status? Profit margins are not great, but I think we already established what that is. Reduced pricing and massive R&D spending will do that. But they have practically no debt, sitting on $1 billion in cash. They recently issued a 400 million share buyback, while tech giants like Google and Meta are actively issuing shares. And they're one of the companies that effectively managed to leverage AI into hyper scalability. Their human-led pipeline was able to produce about 1,800 course units in a quarter. Well, most recently, thanks to AI, that number jumped to over 20,000 for a fraction of what it would have otherwise cost. And this is the playbook to winning in the AI era. They're not reducing costs to operate a smaller company. AI is not replacing their work, but instead propping it into reaching a scale that couldn't have been met without such efficiency. So in the case of this stock, we have been tracking one setup ever since we were very close to a top, ever since this structure didn't manage to extend higher even more directly. We were tracking the idea of a larger wave 1 up within a 5-wave pattern, and we were looking for the 3-wave correction into the yellow area of support. What does this mean? An initial 5-wave pattern is a setup, it's a structure that suggests with high probability that after a 3-wave correction into the area of support, we expect with high probabilities continuation to higher prices within at least another 5 move to the upside. This setup is allowing an extension within a wave 3 that would reach the 138.2% extension of the wave 1, and that would be about $1,800, yeah, give or take, which is more than a 10x from the current level, right? It's a near 20x from the lows of the currently available correction. So what is the risk here? Well, there is no smaller time frame confirmation that a bottom is in. Even if this structure could very easily have a bottom, so far we do not see another 5V move to the upside to suggest with high probability that after a 3-wave correction we are looking for at least another 5 move to the upside. So right now we are looking at the smaller time frame where I do actually see an opportunity here. I do, because I identified within a smaller time frame 2 1-2 setups instead, where this would have been a 1 up, a wave 2 down here, then this would have been my other wave 1 up, then the other wave 2 down that could have just bottomed. Within this setup, I could be looking at an extension within an internal wave 3 that would be only the wave 3 of the wave 3. What is that expected to reach, you may be wondering? Well, the expectation would be that we are looking at the 138.2% extension of the wave 1. So from the current levels, we are talking about a 40% increase, and that would be the general minimum. However, if this internal white area of support cannot hold. If we see a sustained break below the 78.6% retracement, $111. If we see a full invalidation below $105, the beginning of this wave 1, the likelihood is that we will see extensions to new lows. And this is certainly a high risk play. We are not tracking an active uptrend here, not to the same degree that we are looking at on Ametek, but the potential is higher. It is possible that we are looking at a structure that is about to fail. It is possible entirely that this would have been an A, B, C pattern. This could be part of a larger downtrend that is in formation, possibly a larger initial 5 move to the downside even, that could be tracked in a couple of ways to be honest, but let's say for the sake of simplicity this is a 1, 2, 3, 4 and a 5. This would develop as a leading diagonal, but this is always going to be the case. There will always be the risk of possible continuation lower, but this is where everyone seeing the correction that happened over the last week is looking for the exit before it dumps to new lows. And this is where the opportunities actually reside before reversals that could lead to building a massive wave 3 to the upside. Now, one additional positive aspect. In this structure, I'm looking at a wave 2 that would very likely have completed the last leg down, the wave C. What I need to see to confirm this, however, is a break of the levels of resistance, the 78.6% retracement of this being instead a potential wave 1, wave A within a larger bearish pattern. So I would actually like to see the level at $132.40 get a sustained break to strongly indicate that a bottom is actually in, that we are looking at the extension to new highs. And this is what it needs to do to strongly indicate that a bottom is indeed in. And we will actually stop here, but if you want even more such opportunities within the tech sector, outside of the tech sector, within the AI bubble, outside of it, I encourage you to check out the Patreon. But for now, these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to leave a like, subscribe, and if you enjoyed the content and want to support it directly, check out the channel membership, and I'll see you in the next one. Bye bye.